This morning, it broke under $83, crashing to its lowest price ever. And to make it worse, Strategy made an interesting tweet last night implying that they are prepared to sell even more Bitcoin to defend this stretch product. Everyone is wondering, is this the beginning of the death spiral, or are all these rumors and wild theories completely overblown? So I will try my best to make some sense out of all of this for you guys, but I will just start with the price, okay? So I know yesterday, some of you guys are getting mad at me. You're like, Opti's fighting Saylor. You guys are supposed to be doing some signal, and Opti's doing a show alone. It's supposed to be a high signal week. I'm like, yo, look, I know you may be mad. It might seem like I'm fighting Saylor. I'm fighting MicroStrategy right now, but this is the topic at hand. All right, guys. So check this out. And I'm not going to do chart bowling. I am going to pull up the chart just so you can see it. So here is the decline we've seen in Stretch. This morning, it dropped as low, at least on TradingView, as low as $82.53. It is currently at 86. So it rebounded a little bit. It's rebounded a little bit. But obviously yesterday, everyone was freaking out because it was in the $90 per share range. Now we had broken way under that. And everyone's wondering, is this blowing up? Is, from the most cynical view of this, is Saylor's Ponzi finally breaking up? Is the digital credit narrative finally collapsing? I will give you my thoughts on this eventually, but let's just start with what I said earlier. The strategy post, I think they meant to give the market a little more confidence, or rather the investors in the stretch product more confidence that, hey, we will in fact be able to pay off the stretch dividend. But reading this a certain way, it sounds like he's saying, hey, we can sell all of our Bitcoin if we need to protect the stretch cash dividend. Okay, so Strategy posted, we have 32 years of dividend coverage through our Bitcoin reserves. Of course, they hold $55 billion in Bitcoin. They only have to pay $1.7 billion in dividends for the stretch product. And essentially, Bitcoin only needs to go up 3.1% a year for them to be able to facilitate all of these payments. So, like, the math portion of this, I don't think it's a math problem. I don't think this is an accounting issue here where they have the cash to pay this off. Even with their latest moves, even if they didn't sell any Bitcoin, they could pay this off for 7 months. And this is where the controversy really, I think, is what everyone's talking about. But with this tweet alone, look, one of the biggest Bitcoin holders in the world, someone that notoriously, infamously said they would never sell Bitcoin, is now seeing a couple of problems. This could just be a stress test, as I was saying yesterday. But now they basically said we could sell all of our Bitcoin if we needed to protect this product. This is the last stand type of tweet. And I know this was probably done with the view that this should make a stretch or MSTR investor feel better about this. Like, hey, look, if the concern is that we can't pay off the stretch dividends, the stretch yield, well, look how much Bitcoin we have. We can sell the Bitcoin and pay this off for 30 plus years. And that is also implying that Bitcoin, the price of Bitcoin doesn't go up. But put another way, if we are in the peak of a bear market, and Strategy is implying that they will sell more Bitcoin. And we saw what happened when they sold 32 Bitcoin, which was, $2 million. They have $1 billion plus of dividends that they need to pay for. You see where it gets a little tricky. If they do start selling Bitcoin to pay this back, if this is the route that they will go, it's implying that they're going to sell a bunch. Price is going to crash even more. We saw what happened when they sold literally nothing. 32 Bitcoin, it was 0.0038% of their Bitcoin holdings. Wouldn't have even covered the stretch cash dividends or dividend payments. It's like, okay, look, as just a pure Bitcoin holder, as a pure spot Bitcoin guy, like, yo, this doesn't make me feel good. It's like the biggest holders basically saying they're going to dump Bitcoin. It's like, yo, we're in for some pain. And like I said yesterday, you know, again, you guys were yelling at me in the chat. You're like, oh, Opti's out here funding. I thought we were going to get some signal this week. And I'm like, this is the conversation right now. And as I said yesterday, it's not an accounting issue. It's more of a confidence issue. I think people are really upset right now. They're seeing what's happening with the price. It's peak bear market. They maybe feel as if Saylor lied to them. They maybe are, you know, MSTR stretch bag holders. Maybe, hold on. Maybe they got rid of some of the Bitcoin because they thought the Bitcoin treasury play was going to be the way that they could perform better than Bitcoin. You know, the whole Bitcoin is the hurdle rate idea that, hey, Bitcoin's going to go up. Well, it hasn't gone up. And further, maybe I can make more Bitcoin using MSTR, et cetera, and all the other Bitcoin treasury companies. Well, now we're in a bear market, and now we're starting to see that what may have worked during a bull run is starting to get stress test during a bear market. That's kind of what I see happening right now. But let me recap for you guys the entire controversy with the stretch product and where we currently stand. So shouts out to Bull Theory. They did a good summary of this, and I will read it. So, of course, Stretch currently, let's go with Stretch is currently at 86.5. Here it was 85.3. It did get low, you know, in the high 82s. Either way, it's its lowest price ever, right? And this is where the controversy starts to come up, which they literally said yesterday. They may be forced to sell some Bitcoin to protect the Stretch product. Now, the Stretch or STRC is Strategy's preferred stock. We've been covering this. That pays an 11.5% annual dividend. When it trades below, it's $100 per value. The market is signaling that the yield is not high enough. And that's one of the things that I did miss on yesterday's show, that one of the fixes here is basically maybe doing what Strive is doing, where they have a 13% return or yield on their dividends. Of course, they're doing daily. But what it's basically, the market is basically saying, hey, the risk right now to hold Stretch at 11.5% returns, it doesn't make any sense. And if you go to the strategy site here, I'll pull that up real quick. They do have the effective yield return, as you can see, at 13.3%. So currently 11.5, but the market is basically pricing that they need to raise that yield to about 13%. And this does essentially, it's going to cost Strategy a lot more money, which, you know, that's one of the ways that they could get out of this. Anyways, to bring Stretch back to its peg, or it's really not necessarily a peg. That's also one of the things that I've seen a lot of people essentially misrepresent, or at least in their own minds kind of misunderstand, is that $100 par, it's not a peg. It's not a stable coin. This isn't a stable coin depeg. We've seen that in the past when a stable coin depegs. It basically means the stable coin's done. It's like, okay, you know, stable coins are stable until they're not. This isn't a stable coin. So it doesn't necessarily need to be at $100 per se, but that is when, if they get to 100 or above, when Strategy is able to buy more Bitcoin. Currently, it's, as we can tell, lowest price ever, okay? So Strategy would, again, need to raise the dividend rate, but raising the dividend rate means higher annual cash obligations, and Strategy is currently funding that cash by selling the MSTR shares. Again, we saw the whole Bitcoin per share controversy where it looked like Saylor, or I'm not going to personify this, looked like Strategy was diluting the MSTR shareholders, and that was another controversy. So Saylor, again, sorry. Strategy has been in a few controversies in the last few weeks. One, the 32 Bitcoin sale, which a lot of people attributed to the Bitcoin price dropping. The never sell your Bitcoin, and though now we said sell some of your Bitcoin, but make sure you're holding on more of your Bitcoin. The MSTR dilution, and now we're seeing the, as people are calling it, the Stretch depeg, or rather just the lowest price on Stretch that we've ever seen since its launch. And it's making, I think, a lot of people feel a little scared, okay? So The problem is MSTR's NAV premium has compressed close to 1x, meaning there's almost no room left to dilute further. So the tools that they've been using to protect not only MSTR, but Stretch, they are getting backed into a corner. That's what everyone's seeing. You know, some people are a little more hyperbolic and they're like, oh, Ponzi's over, you know, Saylor's blowing up. A lot of people are like, no, they're not going to get liquidated. There's just, you know, they have a few outs. There's trade-off to those outs, and maybe people will lose confidence in the financial engineering of strategy. And again, this is what I keep saying. I think this is what it's all hinged on, is the confidence game that is going on. A lot of people, the market, are feeling a hit to the confidence of Saylor. You know, Saylor's been on a tear for the last 6 years. He's been the prophet, the messiah, the Bitcoin for corporations shill. And I say shill lovingly. He's been the guy out here evangelizing Bitcoin to a whole broader market. And he's been very good. And yes, you know, he's been here a few cycles. He did feel some pain before, but now we're seeing a new test. And I think a lot of people are maybe feeling a little less conviction in the, quote, digital credit theory, meme, etc. So if they can't dilute further, that could force strategy to look at the option, which is selling Bitcoin. Of course, strategy also responded directly to these concerns. According to their latest 8K file, June 15th, their $55 billion Bitcoin reserve covers $1.7 billion in annual dividends and interest expenses for 32 years, which I just showed you. Bitcoin only needs to appreciate 3.1% per year for them to break even on that obligation. On paper, the cushion looks significant. That's what I'm saying. The math, the accounting of this doesn't really look like that much of a problem. It does feel a little overblown. But with Stretch trading at 86 or below, you know, $14+ below its 100 par value, the market is not convinced yet. And that's what I keep saying. It does seem like it's not a mathematical issue. It's more of a confidence issue of the investor willing to take the risk to buy Stretch over just buying Bitcoin, which is one of the things I've been talking about the last couple of days. But when strategy sold, again, just $2 million worth of Bitcoin last time, the price dropped 20%. If strategy is forced into becoming a consistent seller to protect the Stretch product, who knows how low the Bitcoin price would be. What we do know is it would most likely be it would do significant damage to the Bitcoin price. Of course, they're the largest institutional buyer. The data says, hey, they could do this for 32 years, but the market is still pricing STRC at a discount. Now, again, they have the reserves to pay this off. It's not a mathematical accounting issue. If you look at the numbers, even with them with them never selling a Bitcoin, they have 7-month runway with cash on hand right now to pay off these dividends. And from, you know, most intents and purposes, from most of the consensus of everyone out there, in 7 months, we're probably going to be going back up. So I think it's a peak bear market thing right now, right? Everyone's just like, man, bear market's happening. Stretch is getting tested. If Saylor starts selling more, who knows how low this is going to go? It could be a prolonged bear market. If Saylor is forced to sell the whole stack, which is, I think, mathematically impossible, how bad can it get, right? That's, I think, what everyone is talking about. Again, it's not necessarily a structural problem. I think it's more of a timing problem of where we currently are right now. It's less about them not being able to pay back the dividend. The conversation now is kind of like, okay, what is the buffer that the market feels comfortable with them investing in STRC? So they had about 2 years of cash on hand to pay these dividends. Of course, they paid off the 2029 converts with $1.5 billion. Now their cash holdings are down to about 7 months of dividend paybacks. And it seems like the market is not, well, rather, it seems like the Stretch investors, the retail investors that are looking at this product, they're not feeling that comfortable about this. Again, it's really more of a confidence game right now. But if the Bitcoin price goes up, then, of course, there'll be more confidence. Then, of course, the arbitrage players will return. And then this Stretch dip does look like a major opportunity. It's not broken math. Again, it's just a confidence issue in ugly market conditions. And I'm not out here going to do, you know, what you guys think I'm going to do of a simping Saylor. I'm just trying to show you guys what, from my opinion, is going on, from what I see happening right now. Of course, we are in a new era. The Bitcoin treasuries, the digital credit meme, it is a new era on top of Bitcoin. And now we are seeing how this is going to play out in the depths of a bear market. In the, what's the Peaky Blinders? In the bleak midwinter. That's where we currently are. And to make it even worse, the MSTR price is also looking pretty ugly right now. So this isn't just a stretch product. The MSTR price, it looks like it might you know, crater even more as well. So if you've been waiting, what was Nico saying? You know, $50 MSTR price is a good buy. If you've been waiting for those price points, you might get it. You might get it at this point, guys. And again, I don't mean to, you know me, I think I laugh when I should be crying. I'm not that serious of a person. I try to be as serious as possible when I talk, but as you can tell, I am a troll. I am a joker. I do like to have a little fun. But what we are seeing is the market is looking at the latest Saylor moves, which I covered on yesterday's show, and they don't have that much confidence in Saylor. And I think I'm saying that specifically in that way for a reason. It's not necessarily that they don't have confidence in strategy as a company to financially engineer their way out of this. I think in the light of the recent controversies, a lot of people are looking at what Saylor said and they're like, yo, he's lied to us. He said never sell Bitcoin. There's been multiple examples of him saying strategy will never sell Bitcoin. And now he's coming out and saying, well, I never said that. I never said that strategy will never sell Bitcoin. And everyone's like, yeah, no, you literally did. There's clips of you on the internet saying that. And now we're here and the whole digital credit meme is, you know, the killer iPhone moment, or the digital credit is the killer app for Bitcoin. And the whole digital credit is money meme, and everyone's like, what the hell is going on? Like, what are you even talking about right now? I thought Bitcoin was money. How is digital credit money now? So it is what I said. People are starting to lose confidence in Saylor because of the things he said. The math is playing out. Like, there's no problem in the math. It is a confidence issue right now in the really ugly market conditions. And it doesn't make it even any better that you see, you know, tweets like this, where the dividend coverage in November of 2025 was 71 years. And then we got a halving in the dividend coverage now at 32 years. And everyone's like, guys, make it make sense. What exactly is going on? Is there a problem here? And I think that's the controversy. There's multiple things playing out at one time. Are people losing faith in Saylor per se? Maybe. Are people realizing, and this is a strong statement, realizing that maybe Saylor over-engineered this product, and we've seen what has happened on Wall Street when products are over-engineered? Or more of the, I believe in strategy, maybe you're an MSTR bag holder, maybe you're an STRC bag holder, you're like, no, Saylor will figure it out. I truly don't believe that Stretch is going to go under. Like, I find it very hard to believe that Stretch is going to go away anytime soon. It's actually rebounding right now. Here, let me pull this back up. It is rebounding as we speak. So it does look like the markets or the investor is starting to feel a little more comfortable. The effective yield, it just went down as we speak, 13.16 right now. But we'll go back here. It really does feel as if this might just be a short-term money glitch. It might just be a short-term stress test and not so much the beginning of the death spiral. It really just depends who you are listening to. There are a lot of people on Twitter right now that are gloating. They, as I said yesterday, they're looking for a peak bear market sacrifice, metaphorically, of course. And I think everyone kind of wants Saylor to be that guy. Now, as I was making the case yesterday, if Saylor or strategy for whatever reason actually did blow up, that would be really bad for all of us, okay? That would be a prolonged bear market. That would be a crash of Bitcoin to, who knows, like 10, 20K price Bitcoin. It would be horrible. So obviously, I do not want that to happen, nor do I actually think the math works out in that fashion. But what we are seeing, as I keep reiterating to you guys, is people lack of confidence in this product right now. Most likely, and this is kind of my take on it, I laid out kind of the issue here. Most likely, from my opinion, I do think Stretch will get back to par of $100 per share. It might just take a little longer. If you're looking at this chart here, let me go back. If we're looking at this chart, usually it'll rebound in a couple of days, right? So let's see. The first dip was in August of 25th. It took 1, 2, 3, 4, 5, 6, 7, 8, about a week. Again, something similar. It took about a week for it to rebound. Some days it rebounded in a couple of days. But as you can see, this is the largest crash, if I can use that word so loosely, in STRC. And everyone's wondering two questions. One, will it actually rebound? And two, how long will that take? From a lot of the people that I think do hold STRC, or rather, put another way, understand it a little better than me, it'll probably rebound within a month. And of course, in 2 weeks, they are changing the dividend payment schedule. So is this existential for strategy? I don't think so. I think this product will rebound. It's literally been engineered to kind of withstand this. But what we are seeing, again, is the first time it's actually been stressed. The first time it's actually been tested in this way to go this deep. Because again, the whole idea of the Stretch product was, one, low volatility. If Bitcoin scared you away because it's so volatile, well, this was supposed to be an easy 11.5% return with no volatility. Right now, it's, I don't even know. We'll do a little chart boy in here for you guys. It is currently at a what, like, I don't know. We'll go from 100, it's currently down about 14% right now. So it moved in the opposite way. Instead of having an easy, non-volatile 11.5% return in about a week, investors might be panicking because it moved the other way and you just lost 14% on your STRC holding. That is what's happening right now. I think it's really a couple things playing out. One, again, I think it's just a lack of confidence. Two, which is why I never got into Stretch. I've been talking about it on the show. I've been trying to wrap my head around exactly what the product is. But that's why I don't invest in things I don't understand. I think what might have happened is a lot of people that really didn't understand what Stretch was, what its product market fit was, and they just wanted that stable 11.5 return. They want that income coming in. They want to make money off their money. And we're seeing right now that, hey, in the current market conditions, there is a lot of volatility in this. And that is getting people to ask the questions, is this product over-engineered? Was it engineered so that it can withstand this product? Will it actually go back to the $100 par? Again, I think it will. I don't think this is the end for Stretch. And again, maybe it's because I don't want to see MSTR have even more issues or further have strategy sell more Bitcoin, because that means lower Bitcoin price for me. It means longer bear market. It means maybe we will be in a bear market until Q4 or longer, where it did feel like we were getting out of the bear market. As you can see, there's a lot of things going on right now, whether it's new Fed Chair Warshin, the end of the Middle East war. Is strategy going to blow up and sell more Bitcoin? Bitcoin did go down a little bit, even though we went up towards 66K. Currently, I think before the show was around 62K. So there's a lot of factors playing out right now that I think are testing people's convictions. And everyone's just kind of, I think, just doing bear market things. And if you haven't been around for a while, it always happens the same way. that when we get into the depths of a bear market, the Bitcoin infighting starts happening and everyone is looking for, you know, someone's metaphorical head to put on the chopping block. And I think what we've seen is people might be having Saylor fatigue. I was actually going to say it on yesterday's show. It does almost feel like the Bitcoin treasuries have been a net negative. Maybe hot take here. Even though they were acquiring a lot of Bitcoin, it did seem like the shitcoins of this cycle. There's a lot of people angry with Saylor right now. And I don't think he did himself that much of a favor by going out at BTC Prague and, like, you know, mocking all of the Bitcoiners on Twitter. So a lot of people are upset right now. A lot of people are getting this, as I was saying yesterday, like used car salesy, snake oil salesy vibe here. And I personally, I really am indifferent to Saylor. I love someone buying a lot of Bitcoin. I've been on record as saying I really do believe that Saylor's the only reason why we haven't dropped any lower, because he had basically been the only buyer of Bitcoin. And that goes into kind of the secondary effects going on right now. If essentially the buyer of last resort right now, which was strategy, or even though I've shown the data that the data doesn't really correlate with my gut feeling, which was Saylor was the only one buying and that he's keeping the price up. The data doesn't really respond to that. But here's where the thinking goes. If the buyer of last resort now turns into a seller, it's not good for Bitcoin bottoming out at 60K, okay? That's where this controversy is coming from. I think it's going to be one of these things of just patience. Time will tell. But where we're currently seeing, there is a lot of pressure on STRC. There's a lot of pressure on strategy. There's a lot of pressure on Saylor right now. But again, I just hold Bitcoin. I'm a spot Bitcoin holder. That's what we always recommend on this show. That's what we will continue to recommend on this show, is that you should just be buying Bitcoin, taking it into self-custody. And yeah, maybe you will miss out on some opportunities, but you always got to ask yourself one simple question. Is the risk of losing your Bitcoin worth whatever gains you are being promised? And if you don't understand the risks of the product that you're investing in, then you probably should not be investing in it. That's been the thesis. That's been our perspective on any kind of investment strategy on this show since the existence of this show. You know, not financial advice. Actually, I'm going to take it from Adam Livingston, you know, the MSTR Bitcoin treasury guy. Not financial advice, financial entertainment. That is my official view on how I live my life. You know, this is me eating my own soup. If you do not understand the risk of you giving up control of that Bitcoin to chase yield, you probably shouldn't be doing it. Hence why we say, just buy Bitcoin consistently, take Bitcoin into self-custody, let everyone else blow up, and you still have Bitcoin in self-custody and you win. The goal is getting over the finish line with the most Bitcoin under your control as possible. We've seen different versions of this game play out in the past. People want to get more Bitcoin, so they give up their Bitcoin to chase more Bitcoin, and then what happens? They lose on the Bitcoin. We are doing our best to make sure that you guys do not lose your Bitcoin that you currently own chasing more Bitcoin. That's what I recommend. That's what I do. That's what I tell all my friends and family on air and off air. If you don't understand the risk, do not trade your Bitcoin for it. Just take it into self-custody. It's not sexy. It's not pretty. It's kind of boring. You just buy Bitcoin and you store it in self-custody. Yeah, maybe you're going to miss out on the Bitcoin treasury boom that we saw last year. But in 10, 20 years, you might be the only one left holding Bitcoin. Now, obviously, that was a little hyperbolic, but if your friend is doing something risky with this coin and you're just doing the boring, safe thing, I will venture to guess that you will probably make it through this war. Remember what we've been saying for a while. The era we are entering right now, The name of the game is incentivize you to give up your Bitcoin because there's not that much Bitcoin going around, and Wall Street and these institutions and these corporations are coming in, and the only way they can get that Bitcoin is if they get it off you. So it's upon you to not fall for the trap. Now, I'm not saying Saylor's necessarily doing that, but it does follow that pattern, okay? So is Stretch in trouble? Currently, yeah, it might be on, the decline. I don't think it's going to blow up. I don't really think MSTR is going to blow up. We might see some sales here, depending on how the markets react, depending on how confident the market is in Saylor and Stretch and strategy. This is where we currently are. So hopefully, I'm not going to check the chat today because you guys were mean to me yesterday, calling me a fudster, and I'm not giving any signal. Well, today I'm going to do a show. Hopefully you enjoy it. Actually, I lied. I'll probably check the chat on the commercial break. So first commercial break, and I will be right back. Here's the part that nobody says out loud. Buying Bitcoin on an exchange and leaving it there isn't buying Bitcoin. It's buying an IOU. And the last decade has been a masterclass in what happens when those exchanges don't deliver on their promises.
Bitcoin Well is a self-custody Bitcoin platform. That means that when you buy Bitcoin, it goes straight to your self-custody Bitcoin wallet. You actually own it from the very first transaction. They're available both in the United States and Canada. Pricing is transparent, straightforward, and no nonsense. And if you're buying a larger amount of Bitcoin, Bitcoin Well Infinite gives you concierge-level support through a dedicated executive Bitcoin advisor, premium help for when it actually matters.
You can also stack a little extra through the referral and wishing well rewards. A nice bonus on top of the owning your own Bitcoin thing. So go to bitcoinwell.com/simply and sign up for the Bitcoin Well portal today and buy Bitcoin you actually own. Paper burns, paper floods, paper fades. If your seed phrase is written on paper, it's not really backed up. It's waiting to disappear. Stampseed's DIY kit lets you hammer your seed words directly into commercial grade titanium. Fireproof, crush-proof, waterproof, and permanent. Once your words are in the metal, they aren't going anywhere. Use code SIMPLY at stampseed.com for 15% off anything in the store. That's stampseed.com, code SIMPLY. All right, guys, I am going to switch this up a little bit. I am going to give you a number, but first, guys, I do got to talk about the Rumble wallet. If you watch this show, you know what we're about. It's freedom of speech. It's freedom of your financials. It's freedom to own your own money and moving Bitcoin adoption forward. And we truly love the Rumble wallet. If you're watching us on Rumble, you already know we love you guys. Maybe I'm not checking the Rumble chat today, but we are huge fans of Rumble. And the Rumble wallet just makes it so easy to support not only using Bitcoin in a self-sovereign, self-custody way, but also supporting your favorite content creators. So obviously the Rumble wallet just launched. Setup is super simple. So head over to wallet.rumble.com/simply. And if you use the code simply10, they are giving away $10 today. Okay, guys? So if you haven't downloaded it, maybe just download it. If you want to just try it, test it out, go again to wallet.rumble.com/simply. And if you use the code simply10, they are giving $10. Who doesn't like free money? Okay. They are giving you $10 just to download the wallet today. So shouts out to the Rumble team. We love Rumble. We're huge fans of Rumble. It's one of our favorite platforms. Anyways, the current Bitcoin price is $62,360, which is a 50.6% discount from all-time high. Market cap, 1.25 trillion. Crazy. And the block height is 954,278. Whew. All right, guys. I am gonna change this up a little bit. You guys know I usually play a video. Bottom signal is when Opti loses the shirt. Dude, I thought it was hat first, okay? Bottom signal is when I crash out, all right? Anyways, I think this is a good addition to what I just covered. because I think it does. And I've showed you Michael Sullivan's charts recently, but I find this article super interesting because I think it is encapsulating where we currently are right now. I was actually watching, some content last night, and it was saying something on the lines of like, until there's a cohesive we, until Bitcoiners are a real movement, there is no we. And this is kind of what I was thinking last night. And further, we has a very dirty connotation to us. It's like, collectivist. It's like, who is we? We've seen throughout history that when you use that phrase, we, it has been used in a lot of ways to take power away from the individual and give it to the collective. And you guys know us. We are not fans of collectivism here. That's a dirty word here on Simply Bitcoin. But it did make me think of this idea of like, look, Bitcoiners, first of all, we're a tiny minority. There's not that many Bitcoiners out there. Even though we seem like we're a huge movement on Twitter, we're in an echo chamber. There's really not that many of us. And further, there's not that many hardcore Bitcoiners compared to all of the crypto shitcoiners out there. Like that, we don't have the juice yet for Bitcoin, or rather Bitcoiners, to really gain control of the levers of not just power and politics, but of finance. Again, literally one guy's richer than the entire Bitcoin network is worth right now, which is just absolutely crazy. It's absolutely undervalued in my mind. But Michael Sullivan dropped this really good Medium article, or Substack article. It is sentimentssolely.substack.com if you want to read the whole thing. I'm not going to read the whole thing, but there's some interesting takeaways that I will touch on, because I think it is a good summary of where we currently are and where the quote Bitcoin community is. So it's titled "The Fracturing Ideologies of Bitcoin." Same Bitcoin, same price chart, but different emotional realities. And that's what I really want to pinpoint on this show, because everyone's been saying, if you've been following some Bitcoin OGs on Twitter for a while, a lot of people are saying it's like this honestly feels like the worst bear market ever, even though we're above 60K, even though we have nation states adopting Bitcoin, we have Wall Street institutions coming into Bitcoin, we have, extremely high hash rate, like everything is going our way. But the mood right now, it really feels like it's worse than ever before. And the price, it's a lower high. It's a bear market with a lower high. It is kind of a win. So first couple of sentences. The simplistic take is that Bitcoiners are in a bad mood right now. Yeah, we know. Yeah, we know. It's a bad mood, but that misses all the nuance, right? Not every group in Bitcoin is in an equally bad mood. Some are growing more convicted as the price declines, while others grow more frustrated. And he is using the recent Michael Saylor's article of the 4 Ideologies of Bitcoin, where, quote, Bitcoin is no longer a narrow technical experiment or a niche monetary protest. It has become the dominant digital monetary network and a global asset with profound implications for individuals, institutions, corporations, banks, capital markets, and nation states. And in his framing, Saylor basically put out that there's 4 different schools of thought currently in Bitcoin. And they are the maximalists, the capitalists, the technologists, and the fundamentalists. But if we're looking at where we currently are, some Bitcoiners are very bullish. Some of them are very bearish. And again, we all do revolve around one singular thing, and you guys always yell at me, but you already know what it is. It's the price. Look, this is bear market things. It's the price, all right? So despite the different debates and the different factions that we currently find ourselves in, again, broken down into the Bitcoin capitalists who emphasize Bitcoin as digital capital, integrating into global markets, all of the Michael Saylors, Bitcoin technologists who focus on scalability, privacy, security, and future technical threats, like Jameson Law, Kaye, Rene Picard, Matt Corallo, you should probably know some of these names, and the Bitcoin fundamentalists who defend self-custody, decentralization, immutability, and Bitcoin as money against capture or dilution. Matt Odell's, the Luke Dashers, Eric Voskuil, Parker Lewis's of the world. Maybe we don't all fit in one category, But depending on what your vantage point is, you might be feeling something different. You know, the Bitcoin capitalists of the world are essentially saying, look, we're winning. Like, how could you not see that we are winning? We have more capital coming in. We have more vehicles for Bitcoin adoption, whether it's the ETFs, whether it's various loan products, whether it's digital credit, stretch, you know, Bitcoin treasuries, etc. Then the Bitcoin fundamentalists, at least from Michael Sullivan's perspective, are the angriest and the least convicted. They're pissed off. They're like, hey, things aren't going our way. This is not how I saw it happening. Maybe Bitcoin is captured. Maybe Bitcoin is broken. And then the Bitcoin technologists look like they're handling the cycle the best. They are relatively optimistic and are out here leveling up during the bear market and building. Now, you can see here, I've showed you this chart before, the cratering convictions, but this one is the Bitcoin fundamentalist view, where you see the price, and then if it's at 0%, that's neutral. If it's in the negatives, that means they're angry, and if it's in the positive, it means they're happy. And you can see that the Bitcoin fundamentalists are, at least currently, kind of angry, all right? Now, capitalists believe their story. The ETF adopters, the Wall Street integrators, the stonk treasury suit coiners, they're like, look, Bitcoin is being financialized. This is exactly how we thought it was going to happen. Yeah, ignore the price. Bitcoin is winning. More people are going to be able to use Bitcoin. More people have access to Bitcoin. It's just a bear market. Don't worry about it. And this is the chart, right? Now, fundamentalists, they're kind of feeling some friction. They're like, yeah, it's still working as designed. It's not necessarily broken. There are some concerns playing out right now. But overall, it's kind of all right. So I like this quote right here. For Bitcoin fundamentalists, Bitcoin adoption has always been talked about through sovereignty. Bitcoin as an exit from the system. Self-custody is the point, and Bitcoin is an escape from Wall Street financialization. But much of this cycle has pushed a different version of Bitcoin into the foreground. ETFs, treasury companies, MNAV, digital credit, Wall Street adoption, volatility harvesting strategies. Bitcoin capitalists view these things as validation, but to Bitcoin fundamentalists, this does feel like capture. And these differences are showing up in the mood, which I find it super interesting. I am kind of, I don't know, I don't really put myself in any one camp here, but I think it's a good kind of framework. And one of the things that I was kind of thinking about last night is, and I know you guys don't like Bitcoin as politics or Bitcoin and politics. I will say me. I fundamentally believe in the uniparty and that we probably can't vote our way out of this. Two wings of the same bird. It doesn't matter who you vote for. It seems as if the people in power, the politicians in power right now, are incentivized to keep the system running as it is, not really shake up the boat too much. But until us Bitcoiners, one, have huge bags, until we have the finances, until we have the wealth, until we have the power, whereas in Bitcoiners, true Bitcoiners are in those positions of power. And then three, until we have the consciousness of the people, until people realize what we're doing and how it's going to change their lives, we really got to level up. So I'm in kind of all of these camps. I would probably go myself as just like a Bitcoin maximalist. I'm not a technologist. I don't do the treasuries. I'm not really a fundamentalist. I'm not like a dev guy. I think Bitcoin has the power to change the course of humanity, but I always view it in the sense of Bitcoin will empower you as an individual. I am a self-sovereignty, self-custody maxi, but when you look at where we are right now, depending on which faction you're in and depending on who you follow on Twitter, some people are very angry right now. Other people are just like, hey, it is what it is. It's a bear market, cheap sats, take into custody, you're good to go. Then there's, of course, the more bullish, like Wall Street, we're taking over Wall Street, Trojan horse kind of ideas. I do kind of fall in the middle of all of these. But I did unplug yesterday, and I watched the GameStop dumb money show, or sorry, movie. And there was a point in there where I was like, man, we need this for Bitcoin. And if you haven't seen the movie in a while, it's that scene where literally everyone is on social media, or rather, just remind yourself of what 2020 was like with the GameStop Wall Street bets phenomenon. It's like they took over the internet for a little while during 2020. It was like all everyone could talk about. It was one of the biggest things going on. They had this whole like, it's not about the money, it's about making a point, you know, the Joker memes, etc., Roaring Kitty YouTube videos. And I was just, first of all, like I was like, low joke, kind of scared. I'm like, man, I don't know if I want to be the Roaring Kitty there. Like, I don't think I want to be the face of that. Okay. But hey, this is my cross. I guess I'll bear it. Hopefully we can get there. God willing, one day we will get there. But I was thinking of it more in the sense of the cultural phenomenon. And we just aren't there yet. And I think where this bear market has left us, and I think Michael Sulivan and Saylor, give him his credit there for that article, I think they did hit on a fundamental insight, is that Bitcoin, the community, has fractured. It is growing up. And part of that growing up is not everyone believes in the same thing. If you were in Bitcoin in 2017, 2018, or earlier, it did seem like a cohesive community. And then the fork wars happened, and that kind of split the community more. And then in 2018, it was like Bitcoiners versus shitcoiners, and that kind of coalesced the Bitcoin community, the Bitcoin only community, together a little bit. And now we are at this point where there's, you know, suit coiners. There is the Bitcoin treasury guys. There is the Wall Street Bitcoiners. There's the nation state Bitcoiners. And then there's like the, you know, self-sovereignty Bitcoin maxis out here. And we all are kind of, I don't want to say fighting each other, but we are slightly at odds with what we think Bitcoin is going to be. And I do think that a lot of the frustration has come out of people having different views of how Bitcoin will win. Or rather, put another way, a different path of Bitcoin getting to the fabled hyper-Bitcoinization, you know, Bitcoin world reserve currency, all that stuff. We are in a very interesting time. One, I fundamentally believe Bitcoin, look, we are taking over the world. We're tiny. It's tiny, all right? But as we've seen in the last year, maybe you don't like it, but the institutions embracing Bitcoin, I think, is part of the path that Bitcoin had to go to become financialized, to take over the world. It had to be this way. And even though I'm seeing a lot of my friends fight each other and sling mud at each other, and it does seem as if the once cohesive Bitcoin community is fracturing. Like, I don't know about you guys on Twitter, but my Twitter experience isn't what it used to be. Twitter's kind of boring me now. I've been muting a lot of words, you know, muting a lot of accounts. I kind of sometimes don't even want to see Bitcoin content because everyone is just arguing with themselves. And I'm like, oh, look at this funny AI dog video. You know, like, oh, this is nice. But we have seen that the community has fractured along these different lines. Whether you think the institutions coming into Bitcoin was a good thing, whether you think Bitcoin treasuries even have a place in the ecosystem, whether you believe that you should be giving up your keys for these ETFs or not, or you're just kind of, I like to view myself more of a Luddite, even though it's not a very nice thing to say, but it's just, to me, I'm like, yo, look, I just want to save in something. I want to hold that something in my control. And I don't want to give it up. And you guys know I'm a Bitcoin maxi, number go up maxi. Opti is trying to entrap. What did I say? What did I say? What did I say? What am I? Yo, let me see. What are you guys saying? Oh man. Dude, I'm getting roasted today. All right. Okay. You guys are funny. let me go back to this article real quick, and I'll give you just the conclusion. A lot of pretty charts. Everyone's talking past each other, whether you believe MSTR is good, paper Bitcoin bad, running node implementations, etc., etc., etc. Once again, the Bitcoin technologists are focused on the tech. I had to pick a singular chart to share here, but this trend holds true across almost every other technical narrative around Bitcoin you might expect. UTXOs, Lightning, privacy, multi-sigs, BIPs. While the capitalists and fundamentalists are clashing more in the culture war, the technologists are out here talking about using Bitcoin as a technology. Respect. I am probably more on the culture war side. And dude, well, these are not Warby Parkers. Oh man, bulls, bears, and honey badgers. This is the way. It's very. I think it's really peak bear market things. You know, as I always say, and you guys yell at me when I say this, but you may like other aspects of Bitcoin, and you really try not to focus on the fiat price of Bitcoin. Number go up solves all our problems. And currently, we haven't had number go up. And I think that's why we're seeing not only people get angry at Saylor and MSTR and Stretch, but further, why people have been arguing about node implementations, about mining decentralization, though I think mining decentralization is a big concern. When we get to points where we currently are, the infighting gets crazy. As we used to say in the past, Bitcoiners are like white blood cells. And when we don't have something to fight for, we start infighting, and it does feel a bit cancerous. It does feel like we are just eating ourselves, and it you know, we end up with casualties along the way. And I think that's where we are. You know, I will agree with Nico on one thing. I think all of us just kind of have to make it through the summer. If we can make it through the summer, we all know Bitcoin's going to go back up. You know, I don't think anyone that watches this show or anyone that is really a true believer of Bitcoin believes that Bitcoin is, you know, going to die this time. I don't think that that's even a concern for most people. But since we haven't truly had number go up in, 2 years, I think we're seeing a lot of infighting that is definitely just attacking other Bitcoiners. Sorry, I wanted to look at the price. Okay, so we're not gonna chart boy, okay, but let me pull this up. You know, I think the anger comes from the fact that we are basically back at the 2021 highs, okay? I see some of my favorite friends in the chat that like, look, I've been here forever, and I just full circled this. Crazy times, but hey, we got a better entry into the coin. Anyways, I'm going to hit a commercial break. We got Frank Holmes in the building today again, and we're going to have a little chat about all things HIVE. They made some really interesting announcements this week since the last time he was on, and we're going to chat about it. One of them is kind of mind-blowing to me, but let me hit the ads, and I will be right back.
I want to give a shout out to our partner, Ledin. Here's something most Bitcoin holders never figure out until it's too late. You're sitting on wealth you can't touch without selling. Ledin fixes that. Bitcoin-backed loans. You keep your stack, you get cash. And they just introduced their lowest rates ever. No complexity, no fine print. The larger the loan, the lower the rate. These new rates apply to all new loans, refinances, and renewals. You'll see all the rates up front before you apply. The new, lower rates come with Ledin's gold standard protection. Your Bitcoin remains custodied and is never lent out for interest. Perfect 8-year track record of keeping clients' assets safe. Auto top-ups, LTV alerts, and partial repayments to keep you in control. Repay whenever you want with zero penalties or monthly payments. Ledin's perfect $10 billion track record through every market cycle in the last 8 years speaks for itself. Don't choose between a great rate and the safety of your Bitcoin. Get both at Ledin. If you ever thought, what happens to my Bitcoin if something happens to me? Or what happens if I lose my phone? You're not alone. For a lot of people, the biggest barrier to self-custody isn't buying Bitcoin. It's the fear of making a mistake. And that's why I like Bitkey and I recommend it to my friends and family. Bitkey is a Bitcoin wallet built for real life, not just for day one, but for everything that happens in between. Lost devices, upgrades, accidents, and long-term ownership. There's no seed phrase to write down and worry about losing, and no single point of failure that can lock you out of your Bitcoin forever. What really stands out about Bitkey is the peace of mind. Recovery is built in, inheritance is built in. It's a complete self-custody system built by the team behind Square and Cash App, designed to make holding your own Bitcoin simpler and safer. Take self-custody of your Bitcoin today using Bitkey. Go to bitkey.world and use promo code SIMPLY for 10% off your new Bitkey. That's bitkey.world, promo code SIMPLY. I want to give a shout out to our partner, HIVE Digital Technologies. Fueled by clean energy across 3 continents, HIVE runs dual engines, Bitcoin mining and AI compute. Their AI platform is ranked #1 in the world for network performance, and it's doing something bigger than compute. It's accelerating human discovery, the science, the breakthroughs, pushing humanity further and faster. Listed on the NASDAQ with the ticker HIVE. Catch the latest buzz at HIVE Digital Tech on X or hivedigitaltech.com.
Sovereignty isn't just about your money. It's about your communications too. When the grid goes down, cell towers can fail. Hurricanes, cyber attacks, blackouts, most people go dark. Satellite phones don't rely on local infrastructure. With Iridium, 77 satellites in orbit, you can stay connected across the US, even offshore. If you hold your own Bitcoin keys, you should hold your own comms too. Sat123 also has Starlink, battery backups, Faraday bags for your hardware wallets, and everything you need to build your own off-grid Bitcoin citadel. Go to sat123.com/simply and use promo code SIMPLY for 15% off anything in the store. Oh, Frank, how are you? wait. Uh-oh.
I'm back.
Hey, there he is. How are you doing today, Frank? Good to see you again.
Just got back from Florence.
Yeah, you were just hanging out with Nico, huh?
Yeah.
That's awesome. Yeah, Nico, he just texted me before the show. He's like, yo, I'm getting on a plane. I'll be in Miami soon. But enough of Nico. He's not here. Let's talk with Frank. So you had a huge announcement. You acquired a 32 megawatt data center in Boden, Sweden. You've been renting it for 8 years, but why is now the right time for you to actually own it? What changed here? You know, what are the big moves that HIVE is making?
I think that there's some events that took place in Sweden that the opportunity allowed us to go and buy it. They wanted to sell. We are the strongest community corporation, what we've done for that community. And so they said they would like to do a deal. And it's quite significant for us because of the value proposition. This deal, to go build something like this, is 3 times the price we paid. And so that allows us to convert it to about a $500 million revenue HPC data center AI. And so that to us is really compelling in Sweden. And so there's a scramble right now. There's a real scramble for power, for land, and you have to have the land with the power or you don't have a data center. And so what we want to know is to make sure that we own the land, the building, and then as we refurbish it, we'll unlock tremendous value for the HIVE shareholders.
Interesting. So basically like vertical integration here. As long as you got to own the land, and then you also announce Buzz's, let me get these numbers right. You close on a $220 million sovereign AI GPU contract. Is that going into your new Swedish land that you just acquired? So the vertical integration here.
No, this is totally different.
Oh, okay.
This is for Canada,
Mm.
and now we have AI from coast to coast, and we're in downtown Montreal. We'll be expanding into British Columbia with Bell Canada as a partner. We're in Winnipeg with Bell Canada as a partner. So to us, it's part of that significant. What we said a year ago. If you recall, a year ago, every month we were making press releases on the milestones we were hitting, going from 6 exahash to 25. And we said earlier this year, we're going to now increase our AI business. We got the critical mass. We're 2% of the global network of Bitcoin mining. And now we're going to turn around and become the most dominant revenue generating. Our peers, a lot of them are not, they're building out and co-leasing. They're basically, it's called co-location. They're selling their facilities to a hyperscaler. It's a rent contract, whereas we are owning the chips, and we make a lot of money from the chips. And I think that's why we've had some very significant new funds managers come in and buy 5%, 3% of HIVE.
Interesting, Frank. Okay, so talking about you becoming a not only just a Bitcoin mining powerhouse, but an AI powerhouse as well. Last year, you guys brought in what your AI business was 20 million and you wanted to grow it to 100 million. So what's standing between where you are now to where you are going to go? Like what do you need to do?
So we will have other contracts like we just announced. And that's the real exciting part of this vision. And we expect that to accelerate this year. So we're going to go from 10 to 20. Now we're at 36 million. Now add the 200 million, which will get installed in the next 6 months. We're going to be up to $236 million. And we have other contracts that we're just building out with. And so it's very, very tricky in respect that you have these tri-party agreements that you have to make sure you've got a strong partners everywhere, and having Cohere and Bell Canada, the two premier companies in Canada in this space, allows us to be the largest hyperscaler. If you think of what CoreWeave is, well, we're that for Canada.
Interesting. That's actually amazing.
And so if you looked at CoreWeave's revenue multiples and you put them on HIVE would be $12, $15.
Okay. And as I was mentioning the last time you're on, the HIVE stock has been pumping this year. I was joking. I'm like, it's almost doing better returns than Bitcoin right now. I mean, I'm a hardcore Bitcoin self-custody maxi, but it's been rough. It's been a rough bear market here for everyone, Frank.
It has been, and it's difficult for us too as a miner, but we're very frugal of how we function and as being the most efficient miners. And so with that, we've been able to weather difficulty falling, Bitcoin falling, or difficulty rising, and Bitcoin falling is a huge margin compression. And we have new firmware to be able to clock down the machines so that we don't waste any form of energy and costs. And I think that that's really strategic. And being in Paraguay with very stable hydroelectricity, and that's close to 2% of the global network. And that gives us economies of scale. So the Bitcoin tier one data centers is funding the AI business, in addition to some capital raises we've done with $100 million zero coupon bond, which was basically convertible at 492 at the time when it was 2 and change. So we've used mechanisms like that to accelerate this growth. And we're excited about it because I'm a big believer, like I said the other day, we're out to improve humanity. And Bitcoin clearly does that. It creates protection against oppressive governments, which we've witnessed this year, this century in Venezuela, Argentina, Lebanon, Cyprus, Zimbabwe. I can go on with other countries where even Justin Trudeau overreached and came in and abused the banking system to go after people because there was a trucker strike. So you think about this as oppressiveness, and Bitcoin is segregated from these overreaching banking then you're by the government uses the banks, then you protect your wealth, and that's really important for humanity. And two is what we're doing with AI. We're allowing AI to elevate. Canada has an incredible a number of scientists. This corridor we're building, the 320 megawatts, is between the two premier universities for AI in the country, in the world. So that just puts us in a position to improve humanity. But these brains, they need these GPU chips. And for Canada really to scale the research for healthcare, et cetera, they're going to need more, and we're the provider. So I'm very excited about improving humanity with both Bitcoin and AI factories.
Yeah, no, that's awesome, Frank. We had Mason Carter from Giga Energy this morning, and I think you two are probably the most bullish Bitcoiners that I know in regards to how Bitcoin and AI are, you know, they're sister technologies. Usually you're either in one camp. One of my best friends is a huge AI advocate, and I'm always like, dude, no, it's Bitcoin. I think you, Frank, and again, Mason yesterday, like, no, these two technologies together, it is the best time to be a human because it's going to elevate us from where we are. It's going to make us smarter. We're going to have better money. Like, these are the technologies that are going to propel humanity forward. And we've seen what happened in the AI sectors recently. You know, the stocks are doing really well. The AI companies are booming right now. And Bitcoin does feel as if it's being neglected right now, or rather maybe it's just not the shiny thing in the room, but we will have our day soon.
I think you're dealing with geopolitics at another grand scale. And I've mentioned this before, and that's what we have to bear through it. And that is with China and Russia, 30% of the world's Bitcoin production, blowing it out. It's cheap energy, so they can use old ASIC machines when they have subsidized 2-cent electricity. And that's a great pain for all those mega investors because they went long Bitcoin. And this is without sending weapons into America, they're trying to create pain in the wallet. And so we'll see between now and the gubernatorial elections that are coming up, if they win, is there a big swing? And I think that that's what you're wrestling with. So I just continue to say, buy the Bitcoin, put as much as you can on your balance sheet. We used to have more, but we had to accelerate this transformation. And we'll go back to building our Bitcoin infrastructure to own more Bitcoin.
Yeah, Frank, that's actually I don't think I've heard that idea that, you know, maybe the Bitcoin crash is to hurt the Trump faithful that went into Bitcoin. That's actually kind of an interesting idea. I'm gonna have to percolate on that one. But I do want to pivot this a little bit because
you just think, you know, find out these things like Binance blew up October the 10th. And they blew out $19 billion. I mean, and they paid back some of their big hedge funds $100 million of because they said they made a mistake. But all the retail people that got tapped out, they didn't get anything back. So it's a big number. And remember, a lot of people weren't aware of that till months later, and so way after the events taking place. I believe that we have to look at what's happening in this election cycle and the manipulation by our arch enemies, Putin and Xi Jinping, and we'll see how it unfolds. But during this, once this election's over, I think we go on a tear.
Let's go. We can only hope. The chat sitting here right now, they're like, I have the same friend. He's like, okay, cool story, Opti, but win 150K. And we're like, I think we've had some macro headwinds that we kind of are just barely getting over, just barely getting through, that Bitcoin's been fighting. It's not a Bitcoin issue. It's just more of Bitcoin's place in the macro geopolitical landscape.
And I think it's geopolitical, but one thing you have to remember, longer term. Short term is the geopolitical game theory. Yeah. But longer term is the total global debt is not slowing down. It's continuing to grow. And that's what drives old school gold bugs to own more gold, buy gold in the dips. At the same time, it makes Bitcoin more and more attractive because there's only 21 million coins, only a couple million left to mine. So I think that it will have these snaps that will make it not disappear. Everyone, you get these doubters, and we still have to look at the trillions of dollars traded every month. That is the real validation that it's working.
Interesting. Frank, this just came to my head while you're talking. What was your big takeaway on yesterday with Kevin Warsh's first Fed FOMC meeting? I think a lot of people, there's been two different views that I've seen. Some people are like, oh, came out way more hawkish than Trump thought it was. Maybe he went 0 for 2 on a new Fed chair. Other people are like, no, I think they're just trying to instill some stability, some confidence in Kevin Warsh here, and then he'll do what we think he's going to do and be a little more favorable for the Trump kind of monetary policy. So what was your takeaway?
I think it's verbiage. And the verbiage is to impact the 2-year government bond. The 2-year government bond is the most important yield to look at for currency trading versus the yen 2-year government bond, the British pound, the euro. So we've seen that the US dollar has been rising. So the 2-year yield of the US is actually stronger and higher than Europe. So therefore it helps the currency be stronger. And I think that Trump would like the currency to be a little weaker, and that would be dropping rates. So one thing is to talk hawkish and you're conservative and let the market sort of figure its way out. But I don't see he's going to raise rates. The economy is sound. And I think that there's some real positive developments with oil falling. That's a big injection to the economic engine of America. And I remain really bullish about it. The flights for flying to Florence sold out, flying back sold out, and everything is sold out. And so I noticed many more tourists were from China, have been walking around in Florence. And so that to me tells you that China is back, but nothing like it was pre-COVID in tourism. But it means money's being spent, money's turning around the world. And the more that velocity picks up, the better the overall economy. And I think that's better overall for Bitcoin.
Yeah, I couldn't agree more. I do want to pivot here a little bit, Frank, because Jacob, one of our company coworkers, he brought this headline to me this morning, and I was like, this is actually kind of insane. So hopefully I can say this correctly, but AI investor Ashton Brenner, major hedge fund, just disclosed that they bet against NVIDIA, and now they're betting long on HIVE. Like, what are they seeing that no one else is seeing? Because I think people would probably think it's crazy to bet against NVIDIA right now. And then if they aren't familiar with Bitcoin mining, they're like, and they're going long on HIVE? Wait, what is going on here? So Frank, what is your takeaway on this?
There's a well-known ecosystem of hedge funds that do what's called pair trading. And you can look it up. How do you do pair trading? And I know from my JETS ETF that hedge funds will go long $10 million of JETS and want to go short American Airlines when oil prices are rising because they're not hedged and it's going to hurt their stock. And you can see the inverse relationship. Now, since May 20th, oil's fallen below its 50-day and airline stocks have taken off. So they unwind that trade. And now they're going to go long American Airlines. So with that thought process, you go short NVIDIA, but you go long Intel. And Intel has just announced at a big pop, and that's a pairs trade that you think that NVIDIA is trading at huge multiples to revenue. Intel is not. Intel's now got a partnership with the government and with Apple to build the chip. So I think that that's what the guys like him, they're so smart at doing these pairs trading, because pairs trading is based as a law called mean reversion. And mean reversion basically says that a price of a security will only go up so much over 60 trading days before it has a big correction. It will fall only so much before it has a big rebound up. So that's called sigmas, standard deviation moves. And they basically say At 1 standard deviation is 70% of the time. It's a non-event for HIVE to go up or down 25% over 60 days. To go 2 standard deviations or Bitcoin to go 2 standard deviations means there's a very high probability of mean reversion. Well, now you look at Cypher as a stock and you look at HUT8 and you compare the financial models, we're much more efficient, lowest G&A to mine Bitcoin compared to the two of them. They're very big in the space of selling their data center electricity to hyperscalers, and the market has rewarded them 40 times revenue.
Wow.
And HIVE was trading at 4. Okay.
Wow.
4 to 40. So he's a very smart, Leopold's a very smart investor that's looking at that picture that it's a low risk bet. And second of all, most important, is that we're owning our GPU chips. So that means we have much higher margins than just selling our capacity or selling our data centers like rentals to a hyperscaler. And we make much more per hour and higher margins. And so that is what he likes about HIVE, that we own the chips, we are in that business, and some of the chip rates have gone up to $8 an hour. So you got to think you're making 10 cents to 14 cents on an ASIC chip mining Bitcoin, and you're making $8 on an AI chip by NVIDIA.
Wow. That's okay. The math makes sense. The math checks out to me.
So
Over my head, but
just think just think of temperature. If we're in Minneapolis, which gets lots of color in the media, but what's important here is that the average temperature there for the year is 70 degrees, but in the winter is like minus 20, and then it goes up to 100, but the average is 70. So you can't be fooled by the average. You have to turn around and say, what is the high, low, and is there a seasonal pattern? You can apply mathematical models to stocks or currencies, and you do with Bitcoin. So Bitcoin fell a week ago over 60 days, 1.5 standard deviations over 60 trading days. That says mathematically there's like a 90% probability of it going up over the next 60 trading days. And gold was down 2 standard deviations. And so therefore it's now a 93% probability of gold going to rise back to the mean over the next 60 trading days. So if you believe that, which I do, then that believe that the rates and yields are going to fall. And so it's more important to look at the 50-day average yield on 2-year bonds. Are they above or below? And they went slightly above, and we'll probably see them fall. And when they fall below, you will see Bitcoin soar along with gold. So you have this mean reversion. So you sell something at 40 times revenue, you buy something at 4. You see something that's overbought, you sell it to go buy something that's oversold. And that's what a lot of very smart hedge funds do.
Got it, Frank. Okay. I think when you were on last week, I'm pretty sure we had a little technical issue, and we were in the middle of talking of like the 4-year cycle. And I don't want to ask the same question, but I've been of the opinion, and of course I could be wrong, but the chat, I'm guessing, kind of wants to know, do you think that the 60K was the bottom? And what do you see for the rest of this year in terms of Bitcoin's price movement?
Well, you saw the difficulty fell fast.
Yeah.
Which was important. The difficulty went below 30, which is an all-time low, and so that meant a lot of machines went off stream, and so they won't turn on so fast even with this bounce. And so I would think that all-time low, Bitcoin made that low with it. The yields on the 2-year. I think that probably that worst is over now. We get peace in Iran. We're going into this election cycle. Trump's going to do everything to control voters. He's got up there to show the economy's doing well, to come out and vote for the Republicans. So you're a big spend election cycle. So I remain pretty bullish from that end.
Okay. Yeah, I'm with you. Though, you know, Trump did promise us 150K. I don't know how he's going to pump us to 150K before the midterms, but let's hope.
I don't think so. I don't think that that is the real process. But
Yeah,
if you do get another governments, like we've seen gold, if you do get other governments creating a sovereign fund owning Bitcoin, then that will be the catalyst for 150.
Interesting. I don't know if you saw it this morning. Let me pull up this headline real quick, because we did see a clip coming out of, I believe it was Oman. Yeah, so the government of Oman just launched a national Bitcoin mining pool. So kind of, it's not a sovereign wealth fund, but it is happening. We're starting to see that the nation state adoption is happening as we speak.
And Oman and Dubai is the first to change some of their laws based on AI. So they're looking at how do we streamline regulations? How do we streamline? And we start taking that type of a proper process to all the SEC's laws for the 3440 Act. And that would be a huge boom to capital formation.
Yeah, 100%, Frank. I couldn't agree more. Okay, Frank.
But the big part for your listeners regarding HIVE, I think the big part is that we like to say that I function as the visionary, macro, big picture, like we're talking, geopolitics, and Aiden is really a phenomenal operator, and it's really important that he emphasizes execution, understands real estate transactions, and Craig Tavares is a prince of a person, and he's a master builder. And these data centers are complex, so he's built them for the past 20 years, and now he's going to be scaling. So he's the builder, Aiden's the operator, and I'm the visionary. And that was our think tank session when we were in Florence that we had. So that's what we came out of, to try to articulate how we're driving the corporation. But you just stay tuned to this, because if we get 10 times revenue, and we go to 500 million in revenue, that's $5 billion. $5 billion divided by 250 million shares is simple math. That is the potential for investors. And for all those listeners that are HIVE shareholders, thank you, thank you, thank you.
Well, thank you so much, Frank, for coming on the show. I'm sure you, Aiden, and Nico had a great time in Florence.
Hey, they went to Mass in the Duomo.
Oh, really? Wow.
Yeah.
That sounds awesome.
That was sort of a very epic memorial event to go over and be at this incredible infrastructure for spirituality. Ours is for AI and mining Bitcoin. That building is just incredibly beautiful outside and inside, but that's for spirituality. Pray.
Yeah, I'm sure Nico had he'll tell me all about it, but every time Nico goes on these trips,
hard on his knees for higher Bitcoin prices. He fell down.
Well, the chat's not going to believe you, Frank, because Nico is like, look, Q4 is when we're going to bottom. But hey, guys, you heard it here first from Frank. Nico is praying for a higher price. I will lock him down when he comes here, and we'll force him on the show to reiterate that statement, Frank. So thank you so much for coming on the show. We will chat soon. Guys, do you know Frank Bulldog Holmes on the show, giving us the macro geopolitical take of where we are, guys. So it's not all as bad as everyone is making it out to see on social media, guys. On that note, I will catch you tomorrow for the last show of the week. Have a good rest of your day. Thank you for coming on, Frank. Peace out, guys.
Today's episode was brought to you by BitcoinWell.com, a Bitcoin-only platform on a mission to enable financial independence.